Thank you very much. I'm John Stenhouse. I'm chairing today, and I am the Business Support Manager for the University Enterprise Zone. Today we have four very diverse businesses to present to you. And they have 7 minutes to pitch, and they will be then questioned by the panel. Now, the panel today is represented by Andy Mew, the University of Essex Head of Startup Support, Elizabeth Geyer-Brown, who's the University Enterprise Zone Project Manager, Ian Wallace, who's the founder of StarTech NG PLC, investing in next generation tech companies and representing a number of investment funds, and Bridget Connell, who is the UK BAA's top 20 women angel investor. So bearing in mind that these are live pitches being presented to you for the very first time by the founders of very high-tech businesses. We cover everything from agri-tech to security to HR and to medical. So with such a diverse range of opportunities, it'll be interesting to see how these actually compare when put up against one another. They are bidding for funding that is available from the University of Essex, University Enterprise Zone and Research England. And that funding is in the form of convertible loan notes. And if you wish to find out more about these things, then move along to our Space to Grow program at the University of Essex Enterprise Zone. So that's UEZ at essex.ac.uk to find out more. So I would now like to start with the very first pitch. So I am now going to ask Kevin Gooding from Diometer, or Diometer, depending, I'll let Kevin actually decide how that is pronounced, which is digital plumbing for innovative farms. So Kevin, good morning. I'd like you to share your screen, and you have 7 minutes to present. Please go ahead.
Sorry, I'll just get going now. Good morning, my name is Kevin Gooding from Diometer. I'd like to tell you about our new cloud-based virtual farming platform. We call it Digital Plumbing for Innovative Farms. It's about optimizing end-to-end operational workflows for all activities on a farm. It's about helping farmers as they move towards more sustainable farming, as they move towards zero carbon farming, as they move to help the environment and improve the biodiversity. It's also about helping them integrate new and advanced systems and machinery as it evolves. So why Diometer? Today on farms, there tends to be a lot of complex systems and machinery with little or no integration on them. This drives inefficiency, unnecessary costs, reducing profitability, and very importantly, means they have a limited flexibility going forward. When it comes to the future, though, tomorrow, there are a lot of things facing them. Climate change, as we all know, there's a new subsidy regime as we leave the basic payment scheme and evolve into the environmental land management scheme. And also there's a new technology revolution going on. As Minette Batters says, technology is at the heart of everything we do. Our digital farming platform is designed to address all of these things. As a cloud-based platform, it should drive down costs today and support the necessary innovation for tomorrow. So what does it look like? We've built an integrated data core. At the core of it, it's about data. Around that, we will be wrapping an AI toolset to deliver on the right-hand side of this diagram a range of functionality which will allow us to deliver services on an end-to-end basis across a farm to every individual, wherever they happen to be working, whatever device they happen to be using. On the left-hand side of the diagram, very importantly, over time, we'll be integrating with more and more third parties in the hardware, sensors, machinery, robots, etc., software, and data sources. It's a combination of things which will provide it. So therefore, we'll be looking at becoming a digital plumbing for farms in the future. Our sales and marketing strategy is being developed, prioritized rather, by early customers. We are looking at a number of early trials with Tiger Farms. Case studies and references are being built on the back of those, using initially farmers we know through word of mouth and in other industry partners. Marketing, we're supporting it with digital marketing, a number of working with industry organisations, and we're being present at industry events. And we'll also be building a new commercial team focusing on relationship management and trials management. Competitively, there's actually a lot of companies in the agri-tech space, an increasing number. However, we don't really look at them as competitors. We think there's a lot of good companies out there, and rather than compete against them, we would actually prefer to partner with them. Some people we're already starting to talk to, and we believe some of these partners may become future exit opportunities for investors. Remember, our USP is about focusing on digital integration of all farm-wide operations on an end-to-end basis. The team we've built so far consists of myself. I'm the only non-developer in the team. I do have a background of starting technology businesses. I also come from a family farming background, so understand the farming community. I'm also a council member of the Suffolk Agricultural Association. I've been working with Alan Jones now for over 10 years. Alan leads the technology side of the business, and together we have a strong working relationship. We also have what I consider to be a strong advisory team. All three of the people on this slide I would consider to be heavy hitters in the regional agricultural community, with farming experience, but also a lot more than that, with environmental land management, business experience, and international experience. Today, we're about to start our first trial on the back of developing the platform with the Euston Estate in Suffolk. It's a 10,600 acre trial near Thetford. We are looking for a range of different benefits within that. Some of them are very targeted and very specific, and some of them are more exploratory, trying to work out the best ways to measure, for example, the environmental land management scheme, or how to move to zero carbon. Our core proposition is a cloud-based SaaS model, so therefore delivering recurring revenues on an ongoing basis. We'll also be supporting that with custom sales to large farms and some additional revenues through a number of different options. The market size is actually enormous for smart farming, although it's debatable whether smart farming covers a lot of things. So we've taken a part of this as being our target market. And if you look at a bottom-up approach, assuming about £2,000 for the annual cost of the service, which we think is quite light, and there's approximately 22,500 farms in the UK with over 200 hectares, that gives us an addressable market of about 45 million. We believe we can get a significant market share of that because we don't believe anyone else is actually doing precisely what we're looking at. Globally, that could be at least worth 100 million to us in revenues. In terms of our short-term financial projections, by the end of 24-25, we're looking at revenues of about 2.1 million. And you can see from the graph on the right-hand side that a large proportion of that revenue will be recurring revenues from the SaaS proposition. That year also, we're looking to go EBITDA positive. Right. Our plan needs about 1 million to be cash positive. We're looking at an initial raise as a part of that, just 300k, we're offering about 20% equity for it. Initial funds will be spent on onboarding at least 4 large customers, creating a deal pipeline to take us beyond that first phase. Early trials will be completed and the product which will be ready for the full launch. Historically, we have been funded to date with a combination of being bootstrapped, and also we managed to get last year a significant Innovate UK grant project, which has helped us in terms of developing the platform, preparing us. Thank you for that. And if you've got any questions, I'll be happy to take them.
Thank you very much indeed, Kevin. I'd like you to stop sharing your screen, please, and I'll open the floor to questions from the panelists.
Kevin, hi, Ian Wallace. Do you have a MVP, minimal viable product, at the moment? Or are you still developing it?
Not quite. We don't quite have it. We should have our first version from next month, which is when we're planning to go live with the Euston Estate. I say an MVP, it'll be tested.
Yeah.
Sorry, I didn't hear that, Ian.
Is it modular? So I think you were saying somewhere during the presentation that you're going to develop it on the fly with the customers and get their feedback and guidance.
Yes, yes, definitely modular. We've built the core And what we're doing is wrapping functionality around it according to which workflows we're looking at which point. Yes, very modular, and we would expect to be developing it for many years. It's not just a product which we've developed and then sit on. It'll be evolving product over time. That's why a lot of the investment and money that we're putting in is actually to focus on enhancing the proposition further and further.
Any other questions at all for Kevin? We have no Q&A. So if there's no other questions, I will say, Kevin, thank you very much for your presentation. And if you'd like now to mute and sit on the side and watch the others, that'd be great. So as you can see, we are going to go through a very diverse range of opportunities here. So I'm now going to invite Glanville Williams to the stage to present. I'd like Glanville to unmute and to start sharing his screen. Glanville is Security Interims Limited, the SIA control room for security operations, and it's a SaaS operation. Thank you.
Good morning, everybody. Can you all see and hear me? Yes? Okay, excellent. My name is Glanville Williams. I am the CEO of Security Interims Limited, the developers of SIA Control Room, which is an operations and performance management software as a service aimed at security service providers. Security service providers comprise of facility management companies that provide security services, contract security companies, and organizations that manage in-house security teams. In terms of the problems that we identified in the marketplace, there are quite a few of them. Probably the most important one is the poor quality of contract security services received by clients in the UK and across the world. Now, this is in part due to obviously the poor quality of the human resource element, but it's also due to the limited application and deployment of artificial intelligence and software within the industry generally. It's also due to the lack of protective intelligence, which results in missed physical threats and harm that can impact on, in terms of business assets, personnel, and obviously business continuity. For a lot of clients, security is seen as a bit of a grudge purchase, with a typical client investing minimal resources in terms of management time and in terms of the actual quantum of money spent on the service. So very much purchasing in terms of price. Now, we believe that security should be more than just about a uniform face at the door or a bum on the seat. The final problem is the trend that we're seeing at the moment in terms of cuts in police numbers across the world, and with the predicated worsening post-COVID threat environment, which all suggests a growing appetite for what we call transformative security. Now, if you want to know what transformative security is, it's, if you look at the quote in blue on the right, businesses need to be able to see around corners in order to identify, assess, and act on threats that can have irreparable human and business costs. And we all remember the scenes at the Capitol Hill insurrection recently. So what's our solution? Our solution is, first of all, based on the UK regulatory environment. So it's not ubiquitous like our competitors. It's an agile SaaS that operationalizes this shift in corporate security posture and thinking that I've just described, defines what corporate security can and should be about with a full range of innovative and protective intelligence features, some of which you can see on the left-hand side, that can also add value to wider mission critical business activities. So actually just making sure that security is not just a standalone, but actually integrates to all the various business functions. Unlocking the enormous latent potential in transformative security, and all of this for less than £1 per officer per day. Just going to move this. Now, in terms of what we're looking for a £300,000 in return for an equity, an 8% equity stake in the business. The funds will be used for building, team building, obviously building a very strong, robust team, particularly a very good sales and marketing capability, and ongoing product development as well. Our growth strategy is predicated on us being seen as a solution partner of choice for the small and medium-sized security service provider in the UK. Obviously, after that, we want to kind of scale up in other territories in years 2, 3, and down the line. Our exit strategy is based on, hopefully, within 8 to 10 years, a possible IPO or a trade sale. Now, in terms of the market opportunity, the global contract security services market is worth an estimated £194 billion annually. Of this, what we estimate to be spent on security software solutions is around 4 billion annually, and this is quite a conservative estimate. Now, with the current estimate of around 20 million security officers worldwide, that's a per capita spend per security officer of around £200. The typical subscriber would be the small and medium-sized enterprise security company, as I've already explained, employing less than 250 officers, currently not fully leveraging technology in their operations, keen to compete on quality rather than on price, which is what they're doing at the moment, and to differentiate themselves from their competitors by trying to create superior value. Just to give you a quick snapshot of the available market in various territories. In India, there's an estimated, well, there's over 5 million registered security officers in India. In the US, over 1 million. In the UK, we have currently 420,000 registered security officers. And in South Africa, we have around 400,000. In terms of our revenue projections, we are targeting, again, what we think conservatively, to onboard around, on average, 2 security service providers per month. This takes into account a churn rate of probably around 5%. If we're successful, this will generate a revenue stream of around £806,000 in the first year. And as we begin to scale up in different territories in years 2 and 3 down the line, we'll begin to see a bit of a hockey stick effect as we start to generate some significant revenue streams. Just to give you a snapshot of what our competitors are doing at the moment, and these are 2019 figures. The major competitor in the market at the moment is Tractic, and they generated a revenue stream of 22 million in 2019, based in 35 countries. TrackForce, £17 million, based in 45 countries. And a UK competitor, SmartTask, generated less than 1 million, and obviously just based in the UK. Just to give you an idea of how we stack up, or how our software platform stacks up against our major competitors, you can see that we're quite feature rich. And again, as I specified, we are UK centered. We take into account the regulatory environment, which they don't. We have a tiered subscription revenue model. So essentially, the more security officers you have, the less you pay per security officer. We have a 30 days trial free period. And once you move into the enterprise zone, then you get the freebie, which is the global security threat alerts as part of the package. Our marketing and sales strategy is really about trying to build a dedicated multi-channel marketing capability across all platforms, social media, email marketing, having a very strong presence at major industry buyer events such as IFSEC, radio and print advertising, and also trying to project ourselves as a thought leader in the space by churning out, bringing out high quality content, whether it be vlogs, podcasts, videos, etc., and white papers, one of which has been recently published in the City Security magazine, which is quite a prestigious magazine, recently in the spring edition.
Thank you, Glanville. That's an excellent presentation. And I will open the floor to the panel to ask any questions. Panel, do you have any questions of Glanville, please?
Hi, Glanville. Does the platform integrate with other ERP software platforms? So SAP or Oracle, large enterprise business software?
Not at this stage, no.
Is there plans to integrate it? I just wonder, it's a standalone platform management system, is it?
It is at the moment. It's cloud-based, cloud deployed. But yes, I mean, this is something that we'll think about as we progress. But initially, we've left it as a standalone cloud deployed platform. So it comprises of a web-based command and control center and a workflow mobile app in iOS or Android, which officers and clients can use.
Okay, thanks.
Any other questions from the panel?
Glanville, thanks very much for that great overview. Could you just summarise what investment you've raised to date, if at all, or if you're self-funded, and what your current valuation is, please?
Well, we're entirely bootstrapped to date. Valuation is entirely, what you think it's worth. We value our platform at around 3.75 million at the moment. That's obviously, subject to negotiation with investors, but yes, it's entirely bootstrapped to date, and it's comparable with our competitors in terms of the valuation.
Glanville, can I just confirm with you, it's actually ready to buy now?
Yeah. We're launching in May officially. The mobile app, the web platform has been built, tested. The mobile app has just recently been deployed, and it's currently being tested by a cohort of security companies as we speak in the beta testing mode. So we're hoping to launch officially in May.
Thank you very much indeed, Glanville.
Thank you.
Glanville, thank you very much indeed for your presentation. We will now move on to the next presenter, which is Anthony Silva. Anthony is talent recognition, and this is solving recruitment's biggest challenge. Thank you for sharing your screen, Anthony. You have 7 minutes. Please present. Thank you.
Good morning. As John said, my name is Anthony Silva. We solve what has now become the biggest problem in recruitment today. Biggest problem in recruitment today is quite simply, prior to COVID, there were maybe 20 to 25 applicants per vacancy. Even though they were a bit rickety, keyword analysis could probably solve or certainly help sort the wheat from the chaff. Today, there are 300 applicants per vacancy, and where do you start? The old approach of using keyword search and tracking systems just doesn't work. And today, the results are mixed at best. Large companies avoid this by using psychometrics. In fact, 75% of Fortune 500 companies use psychometrics because they know that probably the most important factor in employer retention is the psychology. But psychometrics is expensive, unwieldy, and applicants really don't like the tests or the games. We have the first ATS that bundles friction-free psychometrics. It's easy to use. 3 clicks is all it takes to set up a new vacancy, which then creates a respond to link, which is dropped into the vacancy advert. It takes 2 clicks for the applicant to upload their data and for us to generate a psychometric report. It saves time and money. More importantly, it ranks applicants by best fit so that the recruiter can immediately identify the best 5 candidates to interview. Furthermore, TR Recruiter reinforces D&I policy because it eliminates age, gender, and ethnic bias from the selection process. Let me take this opportunity to stress that there are very real differences between face recognition technology, which is still lacking accuracy and reliability, and the technology which underlies our product. This tech is being rolled out and used to remotely diagnose early stage cardiac disease, so it meets a number of medical standards. At the end of the presentation, I will leave a slide on the screen with more details. Furthermore, it's ethically sound. What is more ethical than identifying people more likely to enjoy the role being advertised? And another point to consider is that we are not selling technology, we are selling a solution to an acute problem. To do so, we just need to be better than the alternative, which is keywords. UK market opportunity. The service addressable markets could be as high as 2.2 billion in the UK. We don't believe this figure, but we'd rather have a SAM of 2.2 billion than a SAM of 220 million. We have 2 flavors, one for small business, which is pay as you go. These are for companies that are probably going to use this once a year, maybe twice a year. And we limit their spend to £350 per vacancy. For medium and enterprise, which is where 90% of our revenues are going to be coming from, We have a mixture of contracts up to 2 years, fixed monthly subscription, so it's the sort of SaaS model. They can use all they can eat, and it can go as low as £50 per vacancy. We have 5 charging scales, which are based on the size of the company by number of employees. So it's a very, very simple market, a very, very simple pricing model. Our go-to-market strategy is basically targeting verticals. So far, ironically, we found recruiting consultants extraordinarily receptive, and they form a major part of our beta testing base. But essentially, selling into medium and enterprise, you have to build a pipeline. What we were originally looking for was up to £900,000 in total in return for about 40% of the company. Funding will be used to build sales and marketing for the most part, and you can see most of our cost is in headcount, and you can see the first 3 colours on our headcount graph are sales and marketing. So far, we've put in 150,000 by way of loans, 50,000 from bounce back, 100,000 from the directors. We signed an MOU this month for 100,000 in non-dilutive equity, with a possible 100,000 to follow, and we are currently seeking 150,000 SEIS raise. Financials. The blue line are the sales, profit before tax, earnings. In the 3rd year, we expect to generate earnings of 7.7 million, which on an exit PE of 5 times, which is conservative, would give us a valuation of 38.5 million. We're looking to exit by way of trade sale in year 4 onwards. Management team. David and I have known each other for 18 years. David started as biz dev director and grew Carphone Warehouse's SME business from 38 million to 129 million in sales in 2 years. Since when, as CEO, he's been retained by a private equity house to help grow a customer journey company, which he grew from 28 million revenue to 45 million, with an EBITDA growth from 17 to 27%. Since 2015, he's been MD of a healthcare business that he built from a standing start to revenue of 6 million at the end of 4 years. They have only given him 3% of the equity. So obviously he doesn't feel like the business that he's built belongs to him. He's coming on board with 35% equity pre-dilution, and he will be running the business. Aubrey and I have known each other for 38 years, my goodness. We prefer an angel who wants some engagement and can lend us some reputational credibility in a vertical, although that's not obligatory.
Anthony, thank you very much indeed for your presentation. I can see that the final slides show where you are now, you're past MVP, and you're heading rapidly for revenue clients. You had one last slide, I seem to recall, if you'd like to put that up. Thank you very much indeed. So I'm going to...
That's the bit that I referred to before.
Yeah. So as you can see, there's quite a bit going on there. Thank you. Okay, would you like to stop sharing your screen, please, Anthony? And I will open the floor to questions.
Anthony, hi, Ian. I see there's a license fee involved. So where is the technology developed, and who, what are the terms of that, if I can ask?
Yeah, the technology has been developed by a company. So it's not our technology. We have a perpetual license where we pay a single license fee, which starts, and the first year is 40 grand, but thereafter rises to £100,000, capped by inflation. There are no royalty fees. So potentially we become very profitable once we hit critical mass.
And have you got exclusivity on the vertical?
We have no exclusivity. They're hoping to sell the technology. What we do have is we have a head start on everyone else. No one else is close to doing a technology deal with our licensors. So we've got a first mover advantage. I mean, it's an execution play, and we reckon we've got 3 to 4 years to build the brand.
Is the core tech, if you like, the facial analysis and correlation with personality type fully robust?
It is robust. We have a simple taste test. I mean, first of all, if you look at, oh, you can't see the slide, but if I can just quickly share the screen again. Technology is empirical. They've tested 200,000 people taking 5-factor model tests, and they taught a machine to read the, using advanced machine vision, they taught the machine to read over 5 million images processed. So it's pretty robust. We have a taste test, so you can take it now. We've not yet found anyone who's turned around and says, no, I disagree with this. It's robust as we can tell.
And finally, sorry, don't want to hog this, but then you match essentially the job profile with personality, and you've got essentially a data set of 240 pre-formed jobs, have you? As I understand.
That's absolutely correct, yes. So what we have is we've got job profiles. The client can select one of the job profiles from the library, or they can create their own using either MBTI or 5-factor model, depending on their expertise. That then creates a sort of profile. As applicants take the test, it's immediately compared against that profile, and then we rank them in order of best fit.
Thank you very much indeed.
Technology,
Anthony, we've run out of time now. So thank you very much indeed, Anthony. And I would now like to introduce into the pitching room, I'd like to introduce Edward Cappabianca from Ingenion Medical. Now, it's a medical tech and it's funding for CE marking. Ed, you have 7 minutes. Please, the floor is yours. Share your screen.
Very good. Good morning, everyone. As John said, my name is Ed Cappabianca. I'm the CEO of Ingenion Medical. Our device is this. It's just about ready for CE mark, as I will say. But before I start, there's a brief video that I'd like to play. You could say the world's catheters have come far from when ancient Greeks inserted a straw reed into the male urethra to relieve urinary retention, but have they? Today's catheters still cause countless hospital-acquired and urinary tract infections. At home, today's urinary retention patients have only inconvenient, dehumanizing options. First, insert a catheter each time they need to urinate, or have a tube inserted with a bag attached. In addition to being inconvenient and dehumanizing, both of these catheterization methods dramatically contribute to potentially fatal infections. For example, in the United Kingdom, catheter-associated urinary tract infections, or CAUTIs, cost between £1 and £2.5 billion and 2,100 lives each year. Now, there's a better way. Introducing Semactive from Ingenion. Once inserted, the Semactive catheter can remain indwelling for up to 30 days and works with the body's natural defenses to reduce the likelihood of infection. With its novel, patented approach, the Semactive catheter uses an external magnet to open the valve, giving the patient complete control to urinate when and where they want. Find out more about Semactive for chronic male retention, the first among Ingenion devices to treat male and female urinary conditions at ingenionmedical.co.uk. Ingenion Medical, because it's time for a better catheter. In summary, Ingenion is a medical device company, and we're developing products for a range of urological conditions. Urinary retention is the first. We'll be moving on to incontinence. Our first product is for men, but we are developing products for women in the future. The background is that the inventor of the original technology himself was a paraplegic after a fall, and he designed a catheter for his own needs to avoid that repeated insertion of catheters. Today, we're on track to get our product CE marked, actually, in fact, by the end of April or mid-May, and into patients later this year to validate our performance. And we are working closely with some urologists here in the UK and elsewhere around the world. The global market opportunity is huge when you also include the cost of urinary tract infections. And in terms of the number of product sales, it's a $15 billion US market. Just here in the UK alone, the addressable market for us is 1.5 billion, and we believe that the serviceable market is about 380 million. This includes both incontinence and retention, which affect women and men with different underlying conditions. The competitive landscape, really the SymActive catheter is very attractive for a number of different reasons. There's nothing external to the patient. There's very low infection risk. It can be used for incontinence, and it's very comfortable and flexible. In fact, in earlier trials in patients outside of the UK, the patients really didn't want to give the devices back. In terms of how the market landscape looks graphically, you can see acute are conditions which are really almost one-off, and chronic are those conditions which happen on a regular basis. Retention is the condition of not being able to urinate, whereas incontinence means that you cannot not urinate. There's an awful lot of leakage. So where we are today with this current product is in the chronic retention, so the lower right-hand portion of the chart, and we are going to be going into the chronic incontinence market with our future products. Our product development pathway over time, there was a previous version of this device which has been improved significantly, and that's the one that I have here today. And what you can see is that this product is available for male acute retention, chronic non-neurogenic bladder, and for other potential applications in spinal cord injured and multiple sclerosis patients. We will be developing, our next product will be for male incontinence, which is the majority of the male market, and then a new device for female incontinence. In terms of how our product is valued, it's really competitive against existing products, particularly when you consider the infection costs on a National Health Service. And we are already working with other groups in this area, including Suffolk Urology and SNEFT, and we'll be looking to be placing this device into patients later this year once we have the CE mark. We also have support from UKRI through an Innovate UK loan grant for the CE marking process. Aside from myself, there are some very experienced people we've been working with, including someone who's a former VP of R&D of CR Bard in the urology space. And our board is very experienced and very supportive, including Alistair Taylor, who had previously worked at Pfizer, founded Biocompatibles and Lombard Medical, and Barry Clare, who's formerly main board director at Boots. In terms of our development milestones, aside from the CE marking, we're looking to apply for other grants, and we are looking to, once we have some clinical data, begin UK sales in January of next year. And once we've raised our next larger funding round, the convertible loan note that we're raising now will be converted into that equity. We look at sales next year, and it's important to note that we will be turning profitable probably by the end in 2023. In reality, what we need is 1,700 patients using our product on a recurring basis, and that is the point at which we will turn to a break even or cash flow positive business. Oh, last thing, right? There was one more slide. We're looking to raise right now 250,000 of convertible loan notes, and like I say, those will convert into the next equity round.
Thank you very much indeed, Ed. I do appreciate that. That's fantastic. So, Ed, stop sharing your screen, and I'll open the floor to questions. Do we have any questions for Ed Cappabianca?
Ed, hello, this is Bridget. Thank you very much for your presentation and a really good video to start with, which made the product very clear. Good to see that you've got a patent in place. Can you just talk to me a bit about manufacturing? Where's the product manufactured and how's it manufactured, etc.?
Absolutely, Bridget. So the main shaft of the product is our mold that we own. That's in Malaysia. There are other small components that I can show you here. The ball bearing, and that little washer bit we get from two separate suppliers. The whole thing is then assembled here in the UK at Europlas Medical, one of our subcontractors, who's based actually down in Malden in Essex. It's then packaged there and then sent to another UK sterilization provider, and that's sterilized. There are really two methods of sterilization. We're using something called ethylene oxide, which is one of the key standards in medical device sterilization.
Super, thank you.
I had Bridget mentioned the patents, but I think does it expire in 2028? So how long has it got to run?
Ian, thank you very much. Our existing patent is on the methods and uses of a valved catheter that is implanted into the body for up to 30 days. That methods and uses patent, yes, extends out till 2028. However, in 2018, we also filed a patent on this design of this valve and the way that works, which is extremely elegant and we believe very low cost relative to other ways that you might be able to solve that. So that's a very fresh patent that has been filed and extended into a global PCT patent. And we're about to file in the next month or so a patent around the way the delivery device locks into this. And that is going to be a new patent that again will further extend our IP position.
And the cost savings, if you like, for infection reduction, I think they've been put together by some academics or something, some studies. Is that and where do they come from?
There are a number of studies, both here in the UK and in the US, about the costs associated with UTIs and the mortality rates for UTIs. They're some of the highest single causes of cost to hospitals, and they also contribute significantly to antibiotic resistance infections. And so that has a further knock on. So by being able to reduce the incidence of infection in these patients, who oftentimes are also quite vulnerable patients, it's going to be a big savings overall.
But there is a $300 upfront cost to this, isn't there?
Oh, absolutely. When somebody gets a bladder infection that then moves into the blood, they are extremely expensive. And so on that $300 cost is really an average across a large population. So the infections won't happen to everyone, but they will eventually happen if you are a chronic user of urinary catheters, almost certainly. So it ultimately will get you. Unfortunately, I have a very dear friend who passed away from MS, but in fact, it wasn't technically the MS that killed him. It was an infection that he got in his blood from having to use catheters, not like this one, but using other catheters.
Thank you very much, Ed, on that cheerful note.
Yeah.
Okay.
Sorry.
Okay. So effectively, what I'd like to do now, I'd like to open to the panel. Are there any further questions they would like to ask any of the presenters that they weren't able to ask at the time? I'll open that now.
Just a question for Anthony of talent recognition. You want 900,000, but you know that's you're only part way there. So what is the strategy if you don't raise that in the short term?
Okay, we originally looked for 900,000. That was before we had MVP. Since that time, we're 250 grand into that 900,000. So we need a further 650. Our costs are scalable. The speed at which we can ramp up sales is dependent on when we raise the finance, and that's what it's going to be used for. So worst case scenario, we can cut our costs according to our revenue stream, but that will delay an exit. What we'd rather do is we'd rather start building our pipeline, which is expensive now, which means that we can comfortably exit from year 4 onwards.
Have you got any letters of intent or pre-orders, whatever you care to call those, from the recruitment consultants, the large majors?
We originally put out our MVP just before Christmas. We got a lot of feedback from them. We had to redesign the user experience. That has just become available again after debugging. We're going out to those MVPs now. We're trying to get them to agree to a 30-day free trial. Thereafter, stay on the system. That's going to be the biggest sort of form of traction, I think, and the most certain form of traction. Realistically, the feedback we're getting from about 40 people we've spoken to is we need this. It's really getting through to the decision makers and ensuring that we can lead them into the service. And as I'm sure you're aware, that normally takes 3 or 4 meetings. That takes time. Our CEO, David, is working full-time in his other job. So that also adds to the delay. So to answer your question in summary, we're going to get there. It's just taking a little bit longer because of lack of resources.
And he is on board when you get the funding, is that right?
He's on board now, but he will jump on as soon as we get the funding, yeah.
Yeah, sure, okay. Thanks.
Thank you, Ian. I will now say thank you very much indeed for taking part in today's live pitch event from the University of Essex, the University Enterprise Zone, part of the Space to Grow Investment Readiness Programme, which is available by emailing uez@essex.ac.uk. Thank you once again to my panel, Andy Mew, Elizabeth Guy-Brown, Bridget Connell, and Ian Wallace. I'm John Stenhouse, and I would now like to say goodbye. And remember, you can watch this again on YouTube once we've uploaded it to our university website. Thank you once again, everybody. Thank you and goodbye.